In this video, we're going to be looking at the 6 reasons why you should invest. So Steve, kick us off. What's the first reason why one should invest?
Reason number 1, creating opportunity. That might be saving for a dream retirement, dream home, leaving a family legacy. But in a nutshell, what it's really about is financial freedom and giving you that opportunity to spend your money however you like down the road.
So ultimately, to create opportunity, we're limited by time and the amount of hours we can work.
Yeah, and that is the case. And I think what really is great about investing is that invested funds are working for you 24/7. So a famous investor by the name of Warren Buffett, who we'll probably speak a lot about in this show, once said that if you don't figure out a way to make money while you sleep, you will work until you die. Essentially what he's saying is that passive income, which is money generated through just no work of your own, one example being investments, is the way to go. And you can literally make money while you sleep.
What would the advantage of investing be over, say, putting your money in a savings account or in a government bond, for example?
So it's a good question. When you look at this chart here, you can see that over time, investments in bonds, in savings accounts, they just don't compare to the amount of returns you can get from investing in the stock market. On average, savings account is about 0.05% interest. Inflation is 1.5%, and inflation is simply prices increasing over time. So if your savings and the interest you're making on your savings is not keeping up with inflation, basically your money is losing value year after year. So by investing in the stock market and with shares and getting an average return of 9 to 10%, you can stay ahead of inflation, maintaining your money's value, and ideally, of course, outperforming the market and over time generating a lot more wealth for yourself.
And investing is not a new thing. What is the benefit of investing now for our audience?
So we're in a really fortunate position living right now in this time because investing is cheaper and easier than ever. You have discount brokerages, and a brokerage is just simply a bank account for stocks and shares where you can buy and sell stocks and shares. Discount brokerages charge little to zero trading fees, and a trading fee is simply the amount of money you spend when you buy or sell a stock. 30 years ago, you might have spent upwards of $40 every time you bought and sold a share, whereas now it can be as little as a couple of dollars, and in most cases it's even free. In addition, there's also been the introduction of fractional shares. And what a fractional share is, as you can guess, is a piece of a full share. Take Amazon for example. Amazon currently is trading at a price of over $3,000 per share. And for the average investor, or for any investor for that matter, that's a serious price. However, with fractional shares, you can buy into Amazon, say with $100, and you will still be able to enjoy the same returns that owning a full share of Amazon would entitle you to. And what I mean by that is, if the overall value of Amazon increases by 20, 25, 50%, your invested amount, so in this case $100, will still increase by that amount. So the great thing about fractional shares is you can buy into these fantastic companies at a price that's affordable for you.
So is there an advantage of starting to invest now rather than say in 5 years' time when our viewer may have more disposable income?
Absolutely, and that's probably the most core thing to remember when investing. It's the amount of time you're in the market as opposed to the amount of money you have. So if you look at this chart here, you can see the difference between investing $10 a week over a long period of time versus just putting one lump sum of $1,000 into an investment. And you can see that in the long run, that consistent, even at a small amount, will compound on top of each other and make a lot more money in the long run. And that is the beauty of compound interest. What is compound interest? Compound interest is essentially your interest making interest, i.e. your money making money. Einstein referred to compound interest as the 8th wonder of the world, and he said that those who understand it earn it, and those who don't pay it. And the important thing you need to remember is, in order to really reap the rewards of compound interest, is you need to buy stocks and shares and hold them for the long run.
So when I think of investing, I think of like getting rich quick, guys on Wall Street. That isn't the reality though.
No, investing really is a long-term game. Yes, you might get lucky breaks where an investment increases by 100, 200% in a short period of time, but in a nutshell, it's a long-term game. So when you buy a company, view it as you literally are buying a piece of that company. And technically you are. You're entitled to dividends, which are just portion of the profits that you'll get from holding an investment. If the investment increases in price, you will get to enjoy that price appreciation, but you need to think of it as if you are buying that company. You wouldn't buy a company and just sell it a week later in reality. So you got to take that mindset and use it the same way when you're investing. When you take a long-term mindset and take a step back and look at the markets from a longer-term perspective, it will also allow you to avoid the short-term volatility that you'll see in the markets on a day-to-day basis. So prices will go up, they'll go down, but over the long term, stocks have been shown to increase in value, and by being a long-term buy and hold investor, you will enjoy those gains.
So to summarize, the 6 key reasons to invest are to create opportunity, invested funds work 24/7, cash is a losing bet, it is now easier and cheaper than ever to invest, the benefit of compound interest, as well as securing your future through longer term thinking. So we hope you learned something there and enjoyed that video.
Make sure to subscribe to the channel for some of our new videos, and more importantly, let us know in the comments below if there's any topics you want us to cover. We're doing these videos to help you, so you need to help us by suggesting the stuff you want us to cover. Oh, make sure to like this video.
Thank you.
See you in the next one.